All right, welcome to another video about the stock market. So, so you must be wondering with all the tariff drama going on, what's next for the stock market. So, just a warning, this video is for educational and entertainment purposes only. I'm not a financial advisor, so consult your financial advisor for, your specific financial situation. But anyway, before I, go into the video, I just want to show you some stats. There are lots of studies that say 90% of the people lose money in stocks. There is this over here. One second, let me just highlight this. All right, so you can look at that. And then there is this peer-reviewed journal article, although this is not a very well-known journal, but still, actually, if you go through this article, it will show you all the reasons why, people lose money. But anyway, just wanted to, and also professionals, close to 80% of the fund managers underperform S&P 500. What that means is if you just put money in S&P 500, don't do anything, you would still perform better than 80 to 90% of money managers. Look at this. 92% of active large cap fund managers also underperform S&P 500. That's by Motley Fool. And the Morningstar says only 10% of them beat the index, meaning 90% of them underperform the stock market. So, what that means is 90% of the retail traders lose money, and 90% of the money managers cannot perform the way S&P 500 does. So you are better off, I mean, just putting money in S&P 500. And I have another video about power of compounding, which, if you go into my channel, you'll see that. I can easily provide the link to that, but when the information is free, people don't appreciate it. So two videos you should watch is one is the power of compounding, the other one is trading basics. So you'll have a good idea about uh, how to trade. Anyway, so you're probably thinking what's next for the stock market. If you're asking that question, that's the reason people lose money because people are thinking about predicting what's going to happen. So that's the wrong question. The right question is, how do I make money in the stock market? Doesn't matter what the stock market is doing. Okay. Um, so you might be wondering, this guy is so cocky, 90% of the people lose money. So how can you make money? Well, just hang on and I will tell you about it. So basically, what you want to do is you want to be a trader. You want to take calculated risk and not a gambler. And even worse is biased one way or another, meaning you are, sorry, you're pro-Trump and all Trump, rara, MAGA, and all of that, or you're anti-Trump, yeah, Trump is doing this and that. So that is going to cloud your judgment. So forget about Trump, forget about that. Just think about how you can make money. And again, by the way, this channel, I don't want to talk about my political views because it's more important to give you advice on how to make money, all right, in the stock market. By the way, my, presentation, the slides and all that, it's just Word document. It's not fancy because I want to give you good information without all the flashy things. All right. So this is pure raw information and I'm not wasting time on anything else. So just want to give you the my analysis. All right. So the goal should be to make money, not prove anything. And also, this is a highly, highly bad advice that people give is high risk, high reward. No, no, that's terrible advice. Low risk, high rewards. That's how you should approach trading. Okay. High probability, high rewards. That's how it should be. Classic example is Warren Buffett. Warren Buffett didn't even buy dot com around dot com time, didn't even buy internet shares, or he hasn't bought any crypto. Okay, because he is going for low risk, right? So that's what you should do. You should go for high rewards and forget about the high risk part. Okay, just go for high rewards and try to minimize risk as much as possible. So I'll explain this with an example. So biggest factor in the accident, this is we are talking about car, you're driving a car, is actually not the road conditions or the weather or other people. It's about how much control you have over your car. Okay. Meaning, it could be snowing, it could be, raining, it could be it could be tons of reasons. And every time, people have a crash, they could blame, oh, that time it was snowing, the other time it was raining. No, but hey, but if you have control over your car, it doesn't matter what's happening, you would still be able to steer clear of the danger, all right, and go into a good direction. So same thing, doesn't matter what's happening, whether it's .com, housing crisis, Trump, or anything else happens, Great Depression, you could still, come out of that if you know what you're doing and if you have control over your situation, meaning you can get out of, bad positions fast. All right. So what is the current situation? See, the current situation is like this, right? See, you have some graphics now. So this is US, okay? It doesn't matter whether it's Republicans or Democrats or whatever, we are all in this together, okay? And this is friends and enemies of the US. You could put China, Canada, Mexico, everybody is here. And these are, the ones that are wondering why are we also suffering? The island with the penguins and all that. So everybody's going to suffer. That's the current situation. Okay? And the situation could change, but let's just focus on what it is going on right now, and we'll talk about other possibilities. So right now, fear and greed index, it is very, very low. It's at 4. Okay. I have not seen for, I mean, I started going back, and if you look, I mean, this chart doesn't go back that far enough, but still you look at the reading, this is actually very, very low. Okay. What does that mean? We're talking about probability. See, I told you, like the probability the market would go up is a lot higher now because there is so much fear. Look at this. I mean, it is fear. Fear greed index can go up to 100. It is right now at a 4. It's very, very low. Okay. So, and just found this also when the fear and greed index goes this low, guess what? The stock market goes up. Here also, it goes up. Boom. And now this is a dated chart, but this is the best I could find. But it's likely that this could happen or something similar to this could happen. But this time, we always say this time is different. This time it's different because it is sort of it is a manufactured crisis. It's not like, COVID time, we didn't know what was going on, how many people are going to die and all of that, or, dot com thing, we don't know which companies are profitable, which companies are not. Housing crisis, we didn't know how many companies would be exposed to that. So there were a lot of unknowns. This time also with tariffs, there are a lot of unknowns, but this crisis is caused. Like there was no need for this. But anyway, um, let's go to this. So you must be wondering if there is so much fear, why not go all in? Why not put a lot of money in it? The reason is because the market can go down a lot more. You see, max loss around 2009 in S&P 500 was 48%. And we're not going back to the Great Depression time where the stock market was lost like 90% because we have Fed and we have lots of tools that can stop that, but who knows? So right now the loss in S&P 500 is only about 18%. So there's a long way to go. Okay. Same thing if you look at Nasdaq, actually Nasdaq took a huge beating, almost more than 80%, all like 83% back in the day. Just gonna remove this. So right now it is only at a little more than 22%. Okay. So not really that bad. Then we have Dow, 53% was the max loss. Right now, currently it is only 15. Russell, about 60%. Right now it is about 30%. So there's still a lot of things could happen. So the goal is to avoid big drops. Why? Because if let's say bought at the peak of 1930, it took 21 years to break even. Like, you had $100 in 1930, 1951, you had 100 again. So 21 years, nothing happened. Like, um, 1937 to 46, 9 years. 70 to 80, 8 years. So it's only breaking even. Like we're assuming that you kept your money there, didn't add anything to it, and so it took that long. Dot com about 7 years, and this is S&P 500, not Nasdaq. Nasdaq from the dot com to coming back to that, it almost took like 15 years for Nasdaq to break even. From 2000, I think it was about 2015. Housing crisis, 6 years. So not only you're not making any money, but your money is just stuck. So we want to avoid this kind of situation. We want a situation where we can make money and have a good life. So in well, that was all doom and gloom, but there are good times also, like 1942 to 73, 31 years, just the market kept going up. Of course, along the way there were 10, 15% crashes, but for the most part there wasn't any major downturn. Same thing like from 2000 to now, let's say 20, I should say 25 years. Sort of. Okay. And then 2009 to current, like 15 plus years. But there are other examples in history where Nikkei, I can show you the chart. Let me see. So this is another video that I had created. So look at Nikkei. It took Nikkei 24 years to break even, sorry, 34 years to break even, where it was in 1990, it reached that in 2004. So it took 34 years. That's somebody's just entire lifetime, working lifetime, I mean, to just break even. And China, it's hasn't broken even since 2007. Look, 2007 was here, and now it's over here. Okay, so that's why the goal is to avoid the big drops. Okay, so you're wondering, okay, I'm scaring you a little bit, and I want you to be scared because like Warren Buffett says, the number one goal is not to lose money. Number two goal is not to forget rule number one. Okay. So make sure you keep your money and also want your money to grow. So if you are scared right now, then I have possible scenarios for you. Okay. So, but before we get into that, let's talk about two scenarios. How could this tariff situation unfold? So there are two scenarios. China and others, you see, they all, make a deal with each other. And you see, there is some DEI over here too. I'm just kidding about that. See, it's all a happy group of people, all DEI. No, but anyway, so all these countries, China and other countries, they come together and they make their deals. And then they say, okay, let's gang up and beat up USA. Okay. That could happen. I mean, that's actually happening because China has put counter tariffs on the US. EU is thinking about that. Canada, Mexico, they're also countering that. So nobody's taking it lying down. But if that happens, there's going to be a big trade war and everybody is going to suffer. Like I showed you over here. See, we are all in this together. Doesn't matter whether you live in the US or not, everybody is going to suffer in the short run. Everybody will suffer. Each and every stock market in the world. If you look at that, US stock market lost close to like $6 trillion from the high to now. In UK stock market, total stock market is like $5 trillion. So we lost complete UK stock market. German DAX is probably around $5, $6 trillion. So look at that, like, huge drop in the US. And also Chinese stock market has dropped. Every stock market in the world is dropping. So everybody's going to be hurt in the long run. So that's the first scenario where, this is brutal. Everybody takes a beating. By the way, this should be the consumer all over the world because the consumer is going to be hit very badly with all these. things that are going on. And the second possibility is the US starts making deals with different countries. Okay. Or the Congress actually has the power to block Trump's tariffs. But the Congress is controlled by Republicans, and Republicans are the one. I mean, Trump is from the Republican Party, so they're not going to act against Trump. At least it doesn't look like now, but who knows? All right, so that seems less likely, but could happen. And then there are lots of protests happening all over the US, although these were not specifically focused on tariffs. But who knows? In future, they could, so these were focused more on Trump and Elon Musk and DI and all of that, not specifically focused on the, what do you call, sorry, I was just checking something. Not for specifically focus on the tariffs. All right. But, it could happen because we've dropped so much in the stock market. All right. And if that happens, then the stock market is going to go up, right? Like, the tariffs are halted or deals are made or whatever happens. Okay. So, yes, there is a lot of uncertainty. So, how do we make money? Okay. So, right now, I'm suggesting two paths. So if you are a long-term investor and you don't have, the opportunity to look at the market day in, day out, then just put money in SPY, but don't go all in. SPY is S&P 500. See, all the blue ones are the ones for long-term investment. All right. So SPY, S&P 500, QQQ is NASDAQ, DI is Dow Jones. This is Russell. This is oil, US oil. Oil has dropped quite a bit, and this is VIX. Okay, you know what? I'm gonna take this off right now. Okay. Sorry about that. You don't want to buy VIX right now. Do not. Okay. But in these colors should be reversed. Sorry again. So forget about the VIX, all right? So forget completely about the VIX, right? Completely. And some of the other possibilities are FXI, yin yang. Uh, FXI is Chinese stock market, and I'll come to the leverage ETFs in a second. And for the long term, just put little by little into India as well as China and S&P 500. The reason I'm bringing India into this is if you look at this, okay, this is this chart is from 1998. I know it's kind of difficult to see. I'll try to make it a little bit bigger. All right. So the first one is the blue one is India. Okay. Let me bring this here. So this one is India, the blue one. The pink is US, and the green is China. So if you look at 1998 to now, India has done a lot better. Like it is almost up 2000%. Okay. US is about 500%, and China is about 200%. So, by the way, when we say 100%, so something is up 100%, that means you've doubled your money. So, $100 would be 200. So, in this case, China, your $100 would have been $300. Okay. US, $600. And with India, a little more than $2,000. Oh, actually, a little less than $2,000. So, you get the idea. Uh, so, I mean, depending upon what markets you have access to, I mean, I would split this into different buckets. So, just in case one country doesn't do that well, at least you have other possibilities. And you might want to throw euro in this also, eurozone. That would be good as well. All right, so that is one option, long term. Long term is all the blue you see. That's for the long term, and forget the VIX part. Okay. And then for the green and the orange you see is quick. So UPRO is right now has lost almost half its value. Okay. It was high was 100 and now it is at 52. Okay. So what you want to do is you want to buy quick long, buy it and sell it 5% higher. Don't even go for 10%. So you will, because the way I see it is this tariff drama is not going to be resolved right away. It's going to take some time. So, Trump will say, yes, I'm talking with Vietnam, I'm doing this and that, then the market will go up. And then then Trump may come back and say, oh, we didn't put any tariffs on pharmaceuticals, so here are tariffs on pharmaceuticals. So there's going to be a lot of back and forth. So you don't want to hold anything long term from trading point of view. So you want to quickly go long on UPRO, buy it, and then sell it 5% higher. Okay. And also, let's say you're buying UPRO at 50, then buy it at 45, 40. So don't go all in, just go little by little, right? Same thing with here, quick short for SPX. Uh, by the way, I want to just show you something. See, max loss on SPY was 48%. So meaning if you had $100, you were left with 52. Around the same time, if you had UPRO, okay, you would have lost 95% of it and you would have had only $5. So $100 would have gone to $5. But at the same time, when the stock market goes up, by the way, UPRO is three times S&P 500, meaning S&P 500 goes up $1, it goes up $3. Okay. Uh, but the reverse is also true. When S&P 500 drops $1, it drops by $3. The SPXU is the reverse of that. Okay. During the downturn, look at that. SPX would have gone up. Why? Because it is the reverse of that. When S&P 500 drops $1, S&P, sorry about this. Okay. S&P 500 drops $1, then SPXU goes up by $3. It is inverse of that. Okay. So during the downturn, it went up, right? But during most of the times, SPXU is going to keep on going down because the market is going up. So if you don't understand the shorting, then just stick to going long. And also, these trades are quick. Okay, meaning you go in, just make 5% profit, come out and buy 50, 45, so on and so forth, because there could be still a possibility that it could still go down. All right. I could be wrong. It could be all resolved over the weekend and everything is good. But you want to make sure that, as I mentioned, you want to avoid the big drop where it takes years and years for you to break even. All right, so just so anything that is in blue, you could think from the long-term point of view, you don't have time to watch the market. So again, don't go all in, just buy little by little. So do that for SPY, QQQ, DI, IWM, USO, and INDA, FXI, as well as SPY. Okay, do that for this. All right, and for if you want to trade, then you can do quick long on UPRO, meaning buy it and then sell it. Again, not don't go all in. Buy it 50, 45, so on and so forth, and start selling it right away. Okay, 5% profit, no more than that. At least that's what I'm doing. It's up to you. But don't be greedy. See, the number one reason, actually, two reasons why most people lose money is fear and greed. And they sell at the wrong time and then they buy at the wrong time too. Like they're selling when everybody, fear is high. Um, and I'm pretty sure this 5 trillion drop that we saw in the US stock market, most of it were retail traders. Of course, money managers also would have lost quite a bit of money. Anyway, so don't be too scared and don't be too greedy. And you know your comfort level. So if you're not that comfortable, then just go for, as a long-term investor, keep buying little by little, all the ones that are in blue, as well as these guys. Buy these. And if you are feeling a little bit, adventurous, then go for the long. And if you're even more adventurous, then go for the shorts, right? Hope this helps and hope you make tons of money and good luck. Have an awesome life. See you next time.